Hi, hi.
Hello. Hello, everyone, and welcome to our panel discussion on CBDCs, stablecoins for consumers and businesses. I'm delighted to moderate this panel here today. While most of you are probably very familiar with what CBDCs and stablecoins are, perhaps worthwhile just sort of reiterating that when we're talking about CBDCs, we are talking about virtual or digital money issued and backed by central banks, whereas stablecoins, we are talking about cryptocurrencies that are pegged or tied to fiat currency or commodity or financial instruments. We want to kick off our discussions really with CBDCs. And while sort of stablecoins and cryptocurrencies have been around for almost 10 to 15 years and have become more and more popular, some of the central banks may have thought that they need to sort of provide an alternative to have still some relevance. At this moment, we know that there are about 130 countries globally that are looking into CBDCs. 19 out of the G20 countries are in the advanced stage of CBDC developments. We have, as of today, I believe there are around 11 countries that have already launched digital currencies. These include Nigeria, the most populous African country, which has a DLT-based CBDC. We have some Caribbean countries that have sort of also launched them. In China, we have a pilot project that reaches about 260 million people. And sort of they are testing it on over 200 scenarios, and that includes public transit, stimulus payments, or e-commerce. Here in Europe, the ECB is on track to begin its pilot and is starting its preparation phase on the 1st of November. Over 20 countries have so far in 2023 started piloting CBDCs. We know that India and Brazil are planning to launch a CBDC next year. And if we look at CBDCs, I think it's always worthwhile pointing out that it can be either blockchain-based or DLT-based, but it can also be running on traditional payments. And I think the ECB is the prominent example for that. Sort of with that in mind, turning now to our distinguished panelists, perhaps a question to all of you. Where do you see really the use cases for CBDCs? I mean, is it more retail? Is it more wholesale? And where do you think, in your view, are we in this journey? Starting perhaps with Dr. Shams. Do you?
All right. Good morning, everybody. I'm Dr. Sham. I'm from Malaysia. I'm CTO and Chief Strategist for the Marchain. We've been working with the Malaysia government past 2 years, from the exploring and to the coming into proof of concept to the actually pilot stage. And we've gone through stages of the experience and the challenges, to understanding what is the difference between digital currency and the cryptocurrency from the start. As we know, all the cryptocurrency is not it's a digital currency, but digital currency is not cryptocurrency. So we got to start from there. And the encrypting the payment systems for the DLT. Next challenge is we do not know where are the originality. We have the wallet that coming in, going out, proving on the transaction hedge. And the second challenge, when we solved that with the proof of concept of identity, the second challenge came the discomfort of the DLT being public ledger. Central bank's data are being exposed. So which we provided the dApps to encrypt all the transactions that on the centralized exchange to be privately can contain and see, and that break through the journey. And
Okay. Søren, do you want to?
So I think that it's a long journey for most of the central banks to really launch a CBDC retail and wholesale. And the use case depends on what you're looking at. If you're looking at a retail CBDC, then traditional payment systems may be enough. But if you look at a wholesale CBDC, then of course you need a DLT base. When I look at the digital euro, then I would say we can come back to the use cases later, I think. But in the end, the traditional payment systems are enough. And the question is, who will do the other part? Must it be, is it a central bank, or will it be financial institutions or stablecoins?
Yeah. Christian?
In the last couple of 2 years, the idea of the central bank digital currency spread around the world. But there are really key differences between the CBDC in each country. You already mentioned retail against wholesale, but there are also the other differences. For example, financial inclusion is one of the most objective of the CBDCs, but we can discuss differently about the financial inclusion in Africa, for example, compared with Europe, when in Europe the unbanked population is a matter of choice, not because they have a entry gate problem. Also, we have to talk about the privacy. Privacy and security in China, where there is the power of authority, cannot compare with Europe when we have the GDPR, for example. Also, we have to talk about, like you mentioned, about the blockchain. Digital euro will not be based on blockchain, at least not entirely. And we have to continue. Programmability of money. Digital euro will not bear the functionality of programmability of the money, but only the payments, while other CBDCs already have embedded this programmability in their stuffs. And we can continue with these kind of differences. Legal tender. In Europe, we already have a law saying that the digital euro will be a legal tender, while in other countries, they are still investigating it to make it mandatory or not mandatory. So the use cases will definitely be very different depending on the region and the audience of the users.
Okay.
Yeah, they're very different drivers behind both. Retail CBDCs aim for avoiding social exclusion, especially in emerging economies. For more advanced economies, they seek basically protective policy, monetary policies, as in with the European digital euro. But whilst wholesale CBDCs aim for enhancing cross-border transactions, basically, and also they have the virtue to cover and solve the mismatch of operating hours, of opening operating hours between different jurisdictions, which is a great virtue, and also to try and shortening the length of the transaction chains, because they can get rid of certain intermediaries, these wholesale CBDCs, so which is a very cool characteristic. So it is a pity, and we'll talk about that afterwards, why the digital euro doesn't expressly, it doesn't cast and cover this possibility.
Yeah. David?
So I think we have to think about, why we're using digital cash, right? So before we think about why we would use CBDCs, we need to think about what are the benefits of using e-money. And the benefits are that you can program e-money. You can basically program on top of this, so you can build it into existing systems. You can get better settlement, so you can basically get almost instantaneous settlement depending on how you're setting things up. It basically creates a platform for inclusivity for different participants, which is much easier than traditional, let's say, like financial services in a way. So this is the reason why we're basically using e-money in all of its forms. And then why would we be using CBDCs? Well, the reason for using CBDCs is because it's backed by the central bank, so it gives you security. So the security is against, compared it to the commercial bank, and obviously this depends on how it's been set up at the central bank. So obviously the more CBDC you can have, the more security you have. And then the other thing is around monetary policy. I think this was mentioned before. So it's about a protection against, for example, private companies, especially some very big tech companies, coming out and creating their own currencies and this having a major effect on how financial services works, inflation rates, all of these things. So actually CBDCs in a way is about kind of protecting the interest of the public against these kinds of major corporations that might go out and build their own stablecoins.
Okay. Thank you all. Going now, or diving perhaps now a bit deeper in some of the use cases and sort of where we are sort of in the process. Christian, I understand that you're also a member of the advisory group to the digital euro, or the industry advisory group to the digital euro. As mentioned earlier, the ECB Council decided last week to start the preparation phase. Can you briefly explain sort of what have you experienced so far in the working group? Where are you, and what will the preparation phase mean in practice?
Well, actually, I cannot answer to this question, what will be next, because like you said, it was just last week decided to go over. But I have a really good impression. In the last couple of years, a lot of things will develop, a lot of things will decided and so on. However, just looking to the scheme rulebook, there are over 70, meaning 70 user stories there. So when analyzing all these stuff, several topics came up as not yet solved and still to be addressed in the future. And I will just nominate a few of them just to keep the time here. For example, the fraud management. Who will bear the liability in case of a fraud? The consumer, the bank, and so on. Then we have the dispute management. Definitely, the European Central Bank will not like to play the role of the mediator between the banks and so on. What happens if there is a problem with the wallets? The consumer will call who? Will call the wallet issuer? Will call the bank who has this account? Or if it's using the white labeled wallet from the ECB, will call ECB. There's no way to call ECB. So all these kind of questions will have to be solved. Continuing with the privacy and security, and also to the offline. It is a feature which digital euro will have, the offline. But as we said before, will not be based on the blockchain, the digital euro as such. But how can you do an offline payments without having some kind of token? And usually the tokens are based on the blockchain or something relatively in the same direction. And we can continue go on and on with this kind of stuff. Programmability, again, it's again a topic. So these topics have to be solved, have to be discussed. Compensation model, for example, I forgot this is really important, because compensation model, it's a four-corner model copied from the car business. However, again, the European Central Bank will not play the mediator role between the. So all these topics definitely will be addressed in the next step. And as a nutshell, the digital euro and CBDC in general is not a new product or service. It's an ecosystem, in a change of the whole ecosystem, and you have to take care that every single component is adapted to fulfill the feature and objectives of the digital euro and the CBDC in general.
Yeah, no, thank you. Several of you have mentioned, that the digital euro, it's not really a DLT-based one, but it's probably mostly running on traditional railways. Søren, where do you see sort of the advantages and then again the use case for the digital euros, and are there any limitations if so? And again, what are the advantages or disadvantages compared to a DLT infrastructure?
So I think that the technological basis of a CBDC must follow the targets you have. And let me add one point. I think that the discussion about the use case for a CBDC is somewhat misleading, at least in case of the ECB. We are talking a lot about what should it be, is there a market gap, where is the unique selling point? That's not the way a central bank thinks, in my view. They have geopolitical targets, they have macroeconomic targets, strategic targets, monetary policy target, maybe, but they don't look for more earnings. And this is true for the digital euro as well. And the ECB has made clear that it has two targets. And to add one thing to Christian, I don't think that they really want to discuss about these targets. They have them, they have a clear plan, an ambitious schedule, and they do what they want to do. But that may be a bit too hard. But the two targets are, they want to create an anchor for trust in the euro as a currency and in the financial system of the eurozone, in a case in the life when cash disappears more and more in daily life of people. So they have the view that they must create a new anchor for a digitalized world in Europe. So that's the first point. And the second point they always emphasize is they want to have more sovereignty. That's what David said. They want something as a counterpart to Visa, MasterCard and PayPal, and of course also to other big techs that may create their own money or even their own currency. So, and given that two targets, I would say, looking at the technological basis, this can be reached undoubtedly with the traditional payment systems. You don't need DLT for that. Nevertheless, we need a DLT-based euro in the Eurozone to exploit the potential that DLT undoubtedly has. But this is not the task, in my view, of a central bank. That's the task of financial institutions and banks.
Okay. Jose Luis, do you also, same question almost to you, sort of, do you think that digital euro would be at a disadvantage sort of going forward and in the future, considering that it's more traditional, running on traditional railroads rather than DLT?
Absolutely, I agree with what has been said. It would be a lost opportunity. I think, I mean, I'm aligned with my colleagues that it all seems to indicate that it's not going to be DLT based, but it's true that the proposal regulation for the digital euro that was put forward in June, it's still technology agnostic, and it seems to delay the decision on the technology that is going to underpin the digital euro. But as you said, it all seems, because of the rule book and the specifics that we know, that it won't be the case. And this will raise questions on interoperability, in resilience, obviously, because of the centralized systems have the one single point break or one single point interruption weakness, as opposed, obviously, to decentralized systems, which continue operating even if one central bank is down. Obviously, and also in functionalities, right? Especially as we advance. I've been talking to people here over the last day. We advanced towards a tokenized ecosystem where it would be those functionalities of that kind of digital currency based on a blockchain that would make sense with concepts such as tokenized deposits, automatic instant settlements internationally, et cetera, et cetera. So lost opportunity is the feeling.
Okay. Moving now a bit away from sort of our Eurocentric view, I mean, we have Dr. Shams. I understand that your company has interacted with the Central Bank of Malaysia, and they are actually planning something based on a sort of DLT base. And could you share some insights on the challenges that a central bank might face when transitioning from a centralized decision-making structure to a decentralized one when they would issue CBDCs?
Thank you. This very relevant question. I think when we're talking about DLT environment, the word centralization we have to clearly understand. The authority, the centralization, the wisdom is always at the top. We have over years of experience and the works under central control system. When we talk about decentralized and their empowerment, the issue is basically, number one, is to understand the technology gap. And number two, that what we face is that the discomfort, when we look at let me bring you a little bit attention on Web 2, the surge of the 5.16 billion people adopted. And that's happened actually in 2019 because of the COVID-19 and lockdown and situation forced all pops and mums at home download the Grab and Uber and the e-commerce to interact. The Web 2 become today 64.4% occupied. I mean, the adoption. But for the present, the drive for use of CBDC will come from the two angles. One is when we have, like Asian, we have the water flooded, earthquake, when you need to descend the aids. You don't need to go through the intermediaries to be disbursed the millions of dollars to the end users. So we can immediately send to the rightful people by having on the DLT. And that has been the turning point. Apart from that, the new generations, the kids at home, are already in Web3. In next 5 years, you like or don't like it, that will be the usage of Web3 and the blockchain is imminent. So it's really, central banks understand that. So they started with the testing on the blockchain, the DLT environment, on wholesale bonds and their issuance. And we have demonstrated the retail bonds when we have 29 million banking populations, and it could easily monitor, disperse, and you actually encourage the public participation in greater height. So a lot of benefit against the concern that we have, which is manageable. Centralized wisdom can be preserved. You got to just share your power of democracy to the decentralized environment without suffering the control aspect of wisdom and the knowledge to be still remain. So that's change in the Malaysia.
Thank you. David, we've heard now about sort of two different CBDC projects. I mean, DLT based or sort of non-DLT based. I understand your company is also working on sort of a universal digital payments network. Can you explain what it is and how it would relate actually to CBDCs?
Sure. So the Universal Digital Payments Network, or the UDPN, is a network set up and run by network participants who are basically creating an alliance. And that alliance allows for the swapping and interchange of CBDCs, and those could be centralized CBDCs or decentralized CBDCs, and stablecoins. This is done over a network. So we have a permission network in the middle, which basically has a set of validators, and these are the alliance members. And then we have on one side, we have business nodes, which are a bit like the payment gateway for businesses or payment providers. And on the other side, we have transaction nodes, and these connect into either the blockchain in one case or centralized solutions in the case of central bank digital currencies. So for example, we're working with a lot of different blockchain providers, but we're also working with, for example, Gershka and Devrient, who's a centralized centralized CBDC provider. And the other thing that you can do with this network is you can deploy smart contracts on top of it. So you can therefore deploy your business applications on top of the actual network itself, and therefore get integration into a payment system, which allows you to be able to swap and transfer these digital cash assets. And we only support regulated fiat-backed stablecoin, or CBDC. And at the moment, we're basically at the process of, let's say, kind of like doing a lot of like POCs with financial services entities, with central banks, with technology companies, with organizations such as, I don't know, like the BIS or regulators, for example, where we're basically testing it out against, I think we're going for like 10 different POCs this year. And then hopefully next year we'll put this into production with maybe like one of these POCs. And we're working with, very large institutions, for example, like Deutsche Bank, Standard Chartered, HSBC, BBVA, BEA, lots of very big financial services institutions. And we've been doing this for about 3 years now. So it's quite mature if you compare it to the other interoperability solutions that we have.
But would it also sort of address, different CBDC projects? So that means they could also sort of become interoperable, and that wouldn't be an issue.
Completely, yeah. So this would be, for example, maybe just giving you an example. If I wanted to pay you in, I don't know, like digital dollar, and you only had, for example, digital euro, then I could basically use my digital dollar to be able to send a request for payment through the network, and the banks would work as an intermediary. And it's the banks that own the transaction node on the network, a bit like the correspondent banking model that we have today, that are basically working as intermediaries to be able to perform these swaps.
Okay. Coming one more time back to sort of the digital euro, but also, I suppose, generally to CBDCs. I mean, is there anything that central banks can do sort of to promote the use of CBDCs or incentivize consumers or commercial banks? I mean, what do you think would be needed, Christian or Søren?
Well, the European Central Bank and central banks have definitely at least one important role to ensure that the population has access in a time of crisis to money. So definitely this is one of the reasons and objectives of the digital euro. On the other side, they do not want that the digital euro is very successful because they do not want to disturb the banks who are the anchor of the financial economic system. And on the bank side, I'm coming from a bank. For us, on the short term, I do not see any kind of benefit for using a digital euro. Definitely for us, it represents only costs and in terms of investment money, but also you have to invest in new processes, new people, to hire new people, to train them with the new skills and so on. So definitely for us, would be a no-go if we would have any kind of decision power in this case. So that's why. But also our dilemma is, me as a bank, shall I try to acquire as many customers as possible? Because otherwise they will go to another competitors. And the competitors, I do not mean only the other banks, but the competitors can be also other PSP, payment service provider. Other side, if I attract too many consumers, new consumer on my side, my cost will increase because everything I have to invest money, but digital euro will be free of charge for any kind of services provided. So that's why it's dilemma. So I do not know that the European Central Bank will push very much. Yeah, they will communicate and so on. And on the bank sides, on the short term, you have to think now how to approach this in the near future, attract or stay and watch.
Yeah.
Yeah, let me add that in usual times, people don't care about who is the issue of the money. If it's a central bank or if it's a commercial bank, that doesn't matter for them. And the only thing that really counts is comfort. If you have to pay, and sometimes you can't avoid it, then it's necessary that it's as easy as possible. And the ECB knows that. So they have said the digital euro must be a very comfortable and easy way to pay. It must be it has to be usable in daily life. So in e-commerce, in person-to-person payments, and also in the point of sale at the supermarket. They have also made clear they will include governmental payments, so everybody has to get in contact with the digital euro, at least most of us. And it had also said that it will be a legal tender, so everyone has to accept it. You have a 100% network in the euro area. This is something we do not have at the moment. Even Visa and the others are not able to deliver that. And it's, like Christian said, it's free of charge. So to sum up, you have a means of payment that is very comfortable, that is for free, that is usable online and offline, and everybody has to accept it. I think that sounds rather attractive. I'm not so sure that the ECB has to convince people given that framework. Of course, we have some risks that come along with that, and Christian's absolutely right. From a financial institution's perspective, you only have costs, you don't have the benefits. It's only a new competitor you have to deal with. But from a central bank perspective, and probably at some time from a user's perspective, it could make sense.
Okay. Dr. Sham, when do you think, I mean, again, having also the non-European perspective, when do you think the deployment of CBDCs can be realized in other parts of the world? I mean, Southeast Asia or the Middle East? And also sort of considering the compatibility of blockchain with Sharia principles. I understand that you are sort of also a founding member of a Sharia compliant sort of blockchain. What do you see sort of there?
Thank you. That's very interesting. The endorsement of the Web3 and blockchain. 20 million out of the 1.9 billion Muslim population has adopted, which represent 1.05% and the fastest growth rate, actually. The reason is the Sharia principle promote four things: security, transparency, anti-monopoly, and facilitations, which is exactly how blockchain works. So what does it mean? Means we need this transition period, people to be comfort, central banks to be comfort. It is not just central bank and CBDC. It's CBDC and the use case and the utility case. For example, Malaysia government is not just talking about cross-border settlement. We do have subsidiary program for the petrol subsidy for the lower income group, which represent 70 to 80% of total Malaysian population. By deploying the CBDC and using the concept of identity, and the government can save $11 billion a year. And the CBDC, I'd like to let everybody participate a bit here. Can people raise your hand if anybody think CBDC can be implemented? Anybody? Okay, so we see little people raising the hand. Have you ever seen the CBDC? Here, this is CBDC. You can hold it. It has intrinsic value. Every country can produce common CBDC. This is 4.25 gram of weight, and this is game changer. I can share with you after this shows. It is available in the booth. So coming back to that, this changes, the phenomenal changes will take place sooner than we think. And because this will be the solution for the discerning the aids to the needed one in the time of the crisis, or the things like the nature disasters, or things like subsidy program to save the government wasted budgets, and the distributions to the needed one, eliminating the third party. But having said that, the transition period will not short of challenge. The understanding, one of the key points, gentlemen, the DLT is the taboo for centralized authority. You need to come out with, or whether we came out with, as our part, the DApps basically encrypt those scared data in the DLT for the private, for the central bank. And that would be the game changers.
Okay. Thank you. Moving now sort of to the second part of our panel debate, sort of stable coins. I mean, again, worthwhile keeping in mind, we have sort of different kinds of stable coins. We have fiat collateralized stable coins, which are probably the most well-known one, that are collateralized or backed by fiat currencies. I mean, the USDT or the USDC, the sort of Tether or Circle sort of stable coins are probably the most well-known one. There are also sort of algorithmic stable coins where it's sort of controlled the supply through an algorithm, or you have sort of crypto collateralized stable coins such as DAI, where the stable coin is backed by crypto asset, but has to be sort of over collateralized. Sort of looking again at the comparison, sort of stable coins versus CBDCs, do you see sort of stable coins as a competitor to CBDCs, or do you have the feeling that sort of central banks will also try to sort of limit the use case almost of stable coins, and where do you see really sort of the biggest use case of stable coins? Starting perhaps with David. Sort of.
So I think that we will have stable coins and we will have CBDCs, and they will interact with each other for two reasons. One reason, there are many stable coins that are just used internally in commercial banking for settlement, maybe with third parties, and they won't necessarily be available to everybody publicly. So bank issue stable coins is a thing, and it will be a thing that's going to stay for a long time. So those kinds of stable coins will exist. And the second reason is that not all jurisdictions are in a position where they're able to issue a CBDC. For political reasons, for economic reasons, for whatever other reason, they're just not at that point in time. But they will want the benefits that you get from digital cash. So I foresee, at least for the near future, probably the midterm future, that we're going to have stable coins and CBDCs working together for that reason. Eventually, we're going to go more and more to the CBDC model, but there will always be these stable coins that are used in private organizations, commercial banks, that will remain.
Okay. Jose Luis?
Yeah, in Spain we've had over the last years new use cases of stable coins authorized by the Banco de España in the Spanish sandbox, which is very good news, particularly in the last couple of years with a bit of bad press on certain unbacked and regulated stablecoins. So the scenario of stablecoins in my mind is going to, or is currently struggling a bit in Europe because of the MiCA regulation coming out, in the sense that it has set up very strict rules that are welcomed by the industry, but at the same time may hamper certain business models, because depending on the design, they may fall into the category of e-money tokens, in which case only a credit institution or a EMI can issue them. They require the liquidity reserves at a ratio 1-to-1 deposited in financial institutions to back any redemption request with free of commission. The restriction, it's welcome, I guess, of non-European denominated stable coins targeting European member union. But in any case, it seems, and some commentators say, that it's catered more for the incumbents and perhaps is benefiting more the new business or lines of business of existing banks and credit institutions, rather enhancing fintechs and new projects of stablecoins. And to these other doubts under MiCA that could affect the stablecoins are the ban on or prohibition on charging interest, which is an issue to consider, and also the MAL checks and the so-called travel rule, or whether or not you have to have a check on each holder of the stablecoin or only on the beneficiary on redemption on the output of the stablecoin. So these are all legal issues still yet to be solved under MiCA, and also how they're going to impact the stablecoins. Well, this is a, let's say, additional headache for them after all they've suffered lately.
Christian?
Yeah. In some of the articles, or actually many articles from the digital euro, it was stated that one of the reasons why we need a digital euro is because of the rise of cryptocurrency and stablecoins. In my opinion, this is not a valid reason. Yeah? Digital euro, it tends to be a pan-European, and while the majority of the stablecoins exercises are private ones and focusing on certain niche. Yesterday, I met a colleague from Belgium. I do not see if he's here. He mentioned he has an exercise regarding the euro kind of stablecoin for storing the value of the car batteries financed by the European Union. Maybe he can give you more examples on this. So I think this will be the future for the stablecoins, focusing on some gaps which the banks or let's say the financial institution did not cover intentionally or not intentionally. And just to back up what David said, this will be collaboration, interoperability, and not a fight between the stablecoin cryptos and the digital currency.
Okay. Søren?
Yeah, I think in future we will see both. We will have an interaction of CBDCs on the one hand from the central bank. We'll also have stablecoins, and they should be interoperable, because otherwise it wouldn't make sense. When we in the Z Bank had a look at the future competitor of digital euro, then we said, okay, we have to get better than the digital euro will be from the central bank. And that's why we launched a project to bring commercial bank money on a DLT. So it's not a stable coin in the common sense, but it is really commercial bank money, fiat money on the DLT. This is something new, but to be honest, it is only the technical background that changes. The fiat money and the commercial bank money is that what is usually used in daily life. So the main problem for this project currently is not the technological basis. The main problem is that you need enough financial institutions to take part, because every form of money depends in a large part on the network effects. And if you do not have enough financial institutions to take part, then it won't have a lasting impact. I think that's one thing you have seen in the last years with several cryptocurrencies and stablecoins as well.
And do you think that sort of challenge can be sort of managed, or do you think banks or other issuers will manage to sort of
I think that most financial institutions or most economic actors, economic partners will act earlier or later because the pressure is increasing and increasing. We have the central bank, we have also the big techs that come up with own solutions, and I hope, it's more a hope, it's not really that I'm fully convinced, but I hope that most important financial institutions in Europe will take part because they see there is no alternative to making their own money better. That will help that the business models financial institutions have in Europe, meaning they have the deposits on their own balance sheet and then finance lending activity. To continue this business model, you need a better commercial bank money, and that's the way we see it can become the future, yes.
Okay. Dr. Sham, coming back again a bit to the topic sort of stablecoins, CBDCs, do you think there is sort of also the possibility of central banks sort of adopting stablecoins, or at least sort of accepting them, and sort of to have there any form of recognition of stablecoins by central banks?
I would put it in different perspective. CBDC or the fiat currencies are issued by individual nations and country government as a sovereign currency. The stable coins is like I'm using USDT by the Tether. That is by the individual entity, and to the government to say, hey, I replace private entity issue form of the currency or in the DLT as my currency. I think there's far away than realistically government to deploy the CBDC itself.
Okay. David, coming back to you again, again, I think we touched upon the interoperability, and I guess the same applies as sort of to different CBDCs project. I mean, it could sort of, the network you're mentioning or the issue of interoperability could also be addressed by the industry. Is that right? Or?
Yeah, that's right. I mean, so the reason that we started the UDPM was to provide interoperability between central bank digital currencies and stablecoins. That was really the focus for us. What we saw, so we started this 3 and a bit years ago, and what we saw is that there were silos of central bank digital currencies getting started. So we had, at that point in time, obviously, we had the e-yuan, we had the e-krona, we had the sand dollar. These were the kind of things that were really kind of getting started. This was very much before the digital euro kind of gained momentum, and these weren't being designed with interoperability in their base, right? So they were very much, I'm designing a central bank digital currency because I have this particular problem, and the problem was different in different places. I think this was mentioned before, right? So in China, it's very much about taxes. In the Bahamas, it's very much about cash management, how we get cash out to everywhere. So there was a need for this. There was a need for interoperability, and at that point in time, nobody was speaking about this need, and nobody was even thinking about the interoperability between stablecoins and central bank digital currencies. It was just not on the table, and that's the reason that we started this, and that's the reason that we think that these kinds of networks are so powerful. And we're also involved in some interesting groups who are providing some interoperability between interoperability networks as well, which actually seems very meta, but is actually really important because there will be interoperability at different levels. So you'll have interoperability at CBDC level, you have interoperability at stablecoin level, maybe even at crypto level. And you need to be able, those things need to mesh together, right? So everybody needs to be speaking the same language.
Okay, we are slowly coming to an end of our discussion. So perhaps sort of as a wrap-up question, we always like to look into the future. And a question to sort of all of our panelists in 30 seconds, if you like. In sort of 5 to 10 years' time, do you think there's still a use case sort of for stablecoins, or could they be replaced by CBDCs?
Well, I would say the coexistence of the stablecoin is there. Like I just shared the stablecoin backed by Go. This would be the best. I'm sure every government can be aligned with their respective CBDC, because it is not the promissory notes of individual government. It's have intrinsic value. So I agree in certain way. The future stablecoin will still exist and play the role, but the CBDC overrules.
So I would see a peaceful coexistence between different forms of money in the next 5 to 10 years. We will have, in Europe at least, a CBDC based on traditional payment systems. We will have a wholesale CBDC on DLT. We will also have stable coins for the crypto market, for example, and we will also see cryptocurrencies maybe as part of a digital gold market, things like that. So I don't think that, and there will be a CBMT, a commercial bank money token, of course, I hope so, in the next 2 to 3 years already. So these are the main parts I think we will see in the future when we look at the parts of money and forms of money we will have in Europe.
Well, if I would know what will happen in 5, 10 years, probably I will be millionaire and having this meeting from Hawaii, from somewhere. Yeah? Just to sum it up, like we said before, I think in coexistence, I think that every stablecoins and CBDC will have different use cases, will address different interests and different reasons and so on. And if I would be a company, unfortunately, I'm working in a bank, I would really focus on building out some kind of platforms layer to make all these stuff interoperable. Like David said, crypto layer, stablecoin and CBDC, and you have to have somehow integrated that we finally have a well-functioning, efficient ecosystem.
Okay. Jose Luis?
I believe in Europe we'll continue to have stable coins as a day-to-day programmable on-chain payment system, which will complement the Euro Digital, especially given the characteristics and the lost opportunities of the Euro Digital that we're seeing.
I think that for users, for this to really work, they don't need to understand that they're using a CBDC or a stablecoin. And I think that's kind of where it's going to go, is that actually you will just use your wallet and you'll have a multi-wallet, and that will basically do the payment, and your car will have a different type of wallet and maybe use a different type of payment system. And all of these things will merge based on standards. And I kind of think that that's kind of where it's probably going to go in 5, 10 years' time. We're nowhere near that now, but hopefully in the future we will be.
Okay, thank you very much to all of my panelists. I think a round of applause is well-deserved. Thank you very much, and yeah, thank you very much. Bye-bye.
Thank you.
Wonderful stuff. Muchísimas gracias, amigos. Absolutely great.